I'm so sorry, ma'am. I know you need this medicine, but it looks like it's not covered by your insurance.
Yeah, unfortunately, I had to deny that one.
Wait, who are you?
I'm your insurance company's pharmacy benefit manager. I get paid based on the price of a medicine, and I don't make as much money off this one.
No one should stand between you and your medicine. Visit phrma.org/middleman to learn more. Paid for by Pharma.
Too late isn't in your vocabulary. Reach your next goal at University of Maryland Global Campus. Get the accredited education you want wherever you are, on your own schedule. UMGC offers online degrees and certificates to help you level up your skills. Apply now and save with no application fee through May 31st. For more than 75 years, UMGC has been transforming adult lives. Access online courses, faster onboarding, and success coaches that help you along the way. Plus, UMGC makes an accredited online education more affordable than ever with scholarships, interest-free payment plan, and no-cost digital resources in place of most textbooks. Choose from more than 125 degree and certificate programs in career-relevant fields and receive lifetime career services at no additional cost. Gain skills local employers are looking for in business, cyber, IT, healthcare, and more. Get started on your undergraduate or graduate degree or certificate online. No application fee if you apply by May 31st. Learn more at umgc.edu/podcast. Certified to operate by Chev.
This is Optimal Finance Daily, episode 2350. Mortgage Prepayment Made Easy. Own your home in half the time, by J.D. Roth of GetRichSlowly.org. And I'm your host and personal finance enthusiast, Diana Merriam. Now let's get right to it and continue optimizing your life. Mortgage Prepayment Made Easy. Own your home in half the time, by J.D. Roth of GetRichSlowly.org. Because I recently eliminated all of my non-mortgage debt, I had a significant positive cash flow. The $1,000 per month I was putting towards debt can now be used for investing. I'm making maximum contributions to my Roth IRA, of course, but that still leaves several $100s each month available for other purposes. This has forced me to evaluate my financial goals. Mortgage prepayment options. For the past year, Chris and I have discussed making accelerated payments on our mortgage. I've written about this choice several times at Get Rich Slowly, and it seems clear that mathematically it makes more sense to invest the money. However, it's also clear that eliminating a mortgage offers a tremendous psychological boost. I've never heard anyone say they regret owning their home outright. I've researched a variety of mortgage acceleration schemes. Refinancing from a 30-year to a 15-year mortgage is appealing, but the interest rate drop from 6.25% isn't enough to make this worthwhile. I could sign up for my bank's bi-weekly payment program, but I don't like the enrollment fee, and I don't like the increase in paperwork. Or we could make an extra payment every year or pay an extra $100 per month, but I feel like we could do more. Ultimately, we decided to use the method described by Charles Givens in his 1988 bestseller, Wealth Without Risk. Quote, "You can pay off your 30-year mortgage in half the time without refinancing by making extra principal payments. On the first of the month when you write your regular mortgage check, write a second check for the principal-only portion of the next month's payment." End quote. Wealth without risk. For most homeowners, the principal portion of a mortgage payment is quite small. For example, our February mortgage bill was $1,681.79. Of this, $1,119.16 was designated for interest, $295.19 for escrow, taxes, and insurance, but only $267.44 for principal. Using Givens' plan, if I include an extra $267.44 with my payment, I'll also knock off the next month's payment from my mortgage. That $267.44 accomplishes the same thing $1,681.79 usually does, but at 16% of the normal monthly cost. That's a bargain. The advantages of this method are: it has a sliding degree of difficulty. At first, the extra principal payments are lower, but as we pay down the mortgage, these extra payments increase. We have time to grow into these increased payments. It's easy for us to back out. If we decide our money is better used elsewhere, we can simply stop making extra principal payments. And every time we make a payment, we're essentially making 2 payments, cutting the term of our mortgage in half. After discussing the pros and cons, Chris and I have agreed to follow a modified version of Given's plan. To make things simple, we're using round numbers. Every January, we'll adjust how much extra we're paying. If our budget gets too tight, we can cut back at any time. The drawbacks. To be fair, Givens doesn't recommend this method for low-interest mortgages like ours. He clearly states, never pay off low-interest mortgages, those under 9%. Instead, use the extra money in a better investment. He wouldn't advocate using this method on a 6.25% mortgage. The March 2008 issue of Consumer Reports has a brief exploration of this topic. Their conclusion? Quote, many people find peace of mind in paying off their mortgages and owning their homes outright, especially as they approach retirement. That can make an investment in your mortgage a worthy choice, psychologically if not financially. Still, the bottom line, according to our Money Lab, is this. Although there are exceptions, chances are you'll be better off putting extra money into a good mutual fund, not into prepaying your mortgage, end quote. Did you see this article? Chris asked me after she finished reading it. Yes, I said. What do you think? I don't care, she said. I want to do both. I want to invest and prepay the mortgage. So do I said. Financial freedom. If we have a substantial emergency fund, if we're fully funding our retirement plans, and if we're saving for other goals, I believe that paying down the mortgage makes sense for us. We understand that we're sacrificing some theoretical and probable future investment returns, but we're also working to create a financial situation that's easier for us to maintain in the long run. If we have no mortgage, that's $1,400 less each month that we have to pay in expenses. We'll still need to pay taxes and insurance. Since we split the payment, that's $700 less per month that I have to pay. Without a mortgage, my fixed expenses would be about $600 a month. My total expenses would be about $950 a month. This would provide tremendous freedom, granting me the opportunity to try things that I might not otherwise be able to do. Another form of diversification. Every investment book I've read says that a smart investor diversifies his portfolio, putting some of his money into each of several different types of investments. I view prepaying the mortgage as diversification. Sure, the stock market will probably beat the 6.25% I'll earn by doing this, but it's guaranteed money. To me, it's better to put my money into my mortgage than into bonds, certificate of deposit, or a high-yield savings account, especially if we're entering a recession. You just listened to the post titled Mortgage Prepayment Made Easy. Own your home in half the time by J.D. Roth of GetRichSlowly.org.
I'm so sorry, ma'am. I know you need this medicine, but it looks like it's not covered by your insurance.
Yeah, unfortunately, I had to deny that one.
Wait, who are you?
I'm your insurance company's pharmacy benefit manager. I get paid based on the price of a medicine, and I don't make as much money off this one.
No one should stand between you and your medicine. Visit phrma.org/middleman to learn more. Paid for by Pharma.
It might not always be talked about, but one of the biggest concerns for business owners is keeping their companies safe. Improve your company's cybersecurity with our sponsor, NordLocker. Now with NordLocker Business, you can secure and control your business data in an end-to-end encrypted cloud. See and manage the organization's data via your admin panel. Your business data stays protected from data leaks, ransomware, and theft. Thanks to NordLocker Business, you're able to manage members in the organization, inviting, suspending, or deleting users. You can also set up roles, user, owner, or admin, to make sure that data is only accessible by the right people. And not to mention, you can check and manage your license limit and the number of currently active users, access business settings, and control file sharing outside your organization, and recover your account. It's time to make sure your company is protected. See NordLocker Business in action now with a 3-month free trial by visiting nordlocker.com/creators with code OFD. That's a 3-month free trial when you visit nordlocker.com/creators and use code OFD. I appreciate that JD acknowledges that mathematically it makes more sense to invest your money versus paying off your mortgage. But many of our decisions around money are led by emotions, not by what is the most optimal decision. There are certainly emotional benefits to having a paid off house, but they don't appeal to me for a few reasons. First of all, you're always going to have housing costs. Even if your mortgage is paid off, you'll pay property taxes forever and they will continue to go up. You'll also always have maintenance costs. Whether you rent or own, whether you have a mortgage or not, you will always pay something to live somewhere unless you're house hacking, which means you rent out portions of your primary residence and have your tenants pay your costs. I see my primary residence as a lifestyle decision, not an investment, and I want to put the bulk of my money into income-producing investments, not an asset that needs ongoing cash infusions. My stock portfolio doesn't have any requirements for additional contributions. Whether I put more money into it or not, it will continue to grow. It's an income-producing asset. My primary residence has the opportunity to appreciate in value, but over the long term, statistics show that this appreciation typically only keeps up with inflation. So why would I want to lock up my money in this tangible asset when it could be working harder for me elsewhere? I do think I'll pay off my house when I'm much older, but it needs to make sense in the context of my overall financial picture. I don't want more than 10% of my net worth tied up in my house. Also, my mortgage is $600 per month. It's a very reasonable cost that I can easily meet even with a loss of income or other financial hardship. If I had a mortgage that was a higher percentage of my monthly income, for many it's close to 30% or more, I would probably get more of an emotional benefit from paying off my mortgage. And that'll do it for today. Have a happy rest of your day, and I'll see you on the Thursday show tomorrow, where your optimal life awaits.